Hello everyone, Neil Patel here. Thank you for downloading the latest episode of the Indian Startup Show. So today I speak with Kumar Srivatsan. He is the co-founder of OptaCredit. OptaCredit is an artificial intelligence powered data-driven online lender that provides credit to people across India. Since demonetization, they've actually seen a 300% increase in applications, and we're also mentioning Forbes. So as you can see, they're doing really well. So in this podcast, we talk about how we got started, what actually is AI, demonetization in India, and how it actually works. And we also talk about why formal credit is hard to get in India, and he also talks about the vision of the company. Kumar also tells me what first-time founders should be focusing on. So please enjoy the show. Thank you. Hello, Kumar. Thanks for coming on the show today.
Hi, Neil. Thanks for the opportunity.
Please tell the listeners a brief overview of what you're building, please.
Hi, my name is Kumar Srivatsan, and I'm the founder and CEO of OptaCredit. OptaCredit is basically an artificial intelligence-powered, data-driven online lender. With basically a branchless lending model. We try to make unsecured credit available to every eligible applicant. So eligible here means not the rigid norms that traditional lenders like banks and financial institutions have made us believe, but creditworthy is basically every data assimilated and understood, which gives us a 360-degree view of the applicant. So we've tried to make it available to every eligible individual and small business across India. And our first step is now we started tying up with companies who want to associate with us so that they can make OptaCredit as an online lending platform available to their employees. So this is something that they feel is a step forward in the employee welfare initiative part of it. And right now we're getting a really good traction.
Excellent. Can you remember how this got started?
So I think somewhere around 2014 was the time I was actually in Ernst & Young as a senior consultant in the banking and financial services insurance space. I was consulting a lot of large banks, traditional institutions, huge financial conglomerates. And that was also around the time when actually a couple of my friends actually stepped out of the corporate ladder, and they were trying to set up some practice of their own. And mind you, these guys were actually qualified chartered accountants or MBAs, and they try to get a line of credit so that it could be helpful in setting up their practice. But the biggest surprise was they were actually rejected, and this was to a person. This happened to a person who was very close to me, and at the time I was in the banking consulting space. So I went to a few banks and actually wanted to deep dive understand why that a person who's so creditworthy on the outside was rejected. And to my surprise, their definition of creditworthy seemed to be having a person having a bureau footprint, a person having standard repayment capacity. It was the other way around. They were trying to fit the customer into their rigid norms. It was like trying to fit circles into squares. It was not the other way around. You had to fit the underwriting mechanism to how a customer wants it, without losing without diluting anything on the creditworthiness aspect. There are multiple ways to do it. So that was around the time I wanted to say, boss, and fintech was a little nascent at the time in India, couple of years back. So it was the time it was a little booming, and I was very keen on doing something in the financial services space for a long time. So combined with that, I put in my papers, a year-long research happened. So I went on the ground, found out that this was something that was widespread. And to my shock, close to, I think India has a bureau coverage of only 22%. This is the latest World Bank statistic. So that means 78% of eligible adult Indian population are not covered by bureaus, credit bureaus, which a credit bureau report is necessary for all formal credit institutions, because of which they're automatically excluded. So this was something that was wrong, and somewhere in 2014, Omidyar had come out with a report which stated that 400 million Indians, 400 million people had borrowed money, and close to only 1 in 7 were actually approved for a formal loan, which means that remaining 6-7 were actually pushed towards an informal credit system, where the rates of interest were going to be extremely high. This is even worse in the business loan segment. So, as I said, after a year-long research, I just pulled in my resources from myself, my family, and with a little help from others, started this venture. So, this is where we are right now. And we also needed a RBI license for a non-banking finance company because we're going to lend out of our own books.
Excellent. So you started in 2014. How's it going so far? Can you share some stats? How many people are going to the website? How many loans you processed, etc. Perhaps.
Okay, 2014 was the time when the idea started forming. 2015 was the time actually we hit the ground and we actually received license a couple of months back. So we've been lending for some time now, not a few months actually. And we was really surprised to find out that a large number of applicants are from the so-called affluent class, because our product is attuned to provide cash flow stability to all individuals. And we were a little surprised because this was something catered to a low and middle income segment of the entire economy. But we started getting demand from someone whom we would define as a little affluent. And after the Prime Minister's demonetization fortnight back, the number of applications simply skyrocketed. There's been a 300% increase in the number of applications, and because of which actually we had a small coverage by Forbes as well.
Mm-hmm. Excellent. And obviously, we have our listeners outside India. If you can just explain what that demonetization is, please.
Yeah. So basically, in a single line, demonetization means making a certain set of currencies invalid, so they are not accepted as legal tender. So the idea could be various ideas could be the reason for demonetization. It happened twice earlier in India. This is the third time it's happening. Right now, the reason for this move seems to be eradication of black money. So black money is basically money that's outside the system that's never been taxed. So it basically is cash that's removed from the system that's not going into direct economic activity. So and also demonetization results in making counterfeit money invalid. So counterfeiting of old notes now is no more profitable. And the government claims to have brought in a lot of security features which are going to prohibit or make counterfeiting that much more costlier. So this removes hawala, that is money laundering. This removes counterfeiting. This removes terrorist funding, drug money. So every day we get to hear news that a lot of illegal activities have come to a standstill. There are no more. Even today I read a news stating that every person from Supari killers, all these contract killers from the underworld, all these guys are now jobless, which basically means that these guys will sooner or later do something desperate and get caught. Mm-hmm. So this has been a brilliant move by the government. But yes, there is going to be short-term pain. But because of the swiftness with which the government has come out with, and then the surprise factor has actually caught everyone off guard. And there is going to be some pain, but I think it's all for the greater good.
Mm-hmm. Excellent. You mentioned AI powered. What does that specifically mean?
So, okay. So if I need to boil it down, so artificial intelligence is basically a set of algorithms, machine learning algorithms put together to try to understand a set of problems, to identify patterns to help us solve a problem better. So in our case, if you look at what I was stating earlier, I was telling that a lot of applicants were actually looked at only from a certain point of view. That is, if you had a bureau score, you were eligible to apply. If you did not have bureau score, traditional lenders would reject you. Mm-hmm. But if we needed an engine that would help us also look at various data points. So basically, I am trying to tell every data that I'm able to pull out about an applicant is relevant enough for me to underwrite and provide some credit scores, internal credit scores, for us to provide loans to them. So if you look at it, every applicant who comes on our OptaCredit platform, we pull in close to 800 to 1,000 actionable data points. So every data says something about the person, and we try to, over a period of time, train the engine to find out what it means. So it could be as simple as someone paying their rent on time. That is basically not a positive, but someone defaulting on rent is a negative. Mm-hmm. So so it's a combination of such analytical tools, such algorithms, and it keeps on retraining the engine over a period of time. We start providing weightages to points that might have been totally thought as useless, and similarly vice versa. We'll totally remove importance to points which we thought were extremely crucial. So this is what AI in simple means, and it's helping us to find out patterns in data sets that we had no clue about.
Mm-hmm. Mm-hmm. What does the law say about this? Can anyone do this then?
There are various models in alternative lending in India. So we are a niche in the space mainly because we are an online lender, but we lend out of our own books, which means we require a non-banking finance company license. So there have been a lot of coverage on the alternative lending space in India, but the majority of the players have been either marketplaces or peer-to-peer lenders. Until now, they have not been regulated, but Reserve Bank of India has brought out a white paper which states that they need to get some licenses as well. For us, this is a mandatory license if you're going to lend money out of your own balance sheet, out of your own money. So getting an NBFC license is not that easy because RBI tends to look into every data point, a track record about you, whether you have the minimum net owned funds to take care of the NBFC license and also lending operations, whether the management personnel have the basic track record or the experience to do the job, and also the various due diligence to verify the eligibility of the applicants. So this is something that is extremely crucial for us, and going forward, I think RBI is going to look a lot into our NBFC licensing.
Excellent. How do you make money out of this then?
So it's a simple model. So if you look at it, lending is basically getting money at a lower interest rate and start lending it at a higher interest rate, and the gap is basically your spread. So that is similar in this case, but what we have done is stripped away all the unnecessary factors like removing branches, marketing, because we tie up, in case of personals, because we tie up with closed ecosystems. Closed ecosystems here necessarily mean employers. So where data or near real-time data is available about the applicant, from which we can authenticate the applicant's data inputs. Here, it is going to be the person's employer. So because we sign up with them, what happens is it removes the marketing cost totally. It removes the necessity to keep physical branches of brick and mortar setup, mainly because data is going to, we have a tie up with all these employees where they provide validated data about their employees. So irrespective of where they might apply from any corner of India, we start pulling in data about them, which means we remove a large portion of the cost away from our internal costs, that which basically going to be marketing, employees, all OPEX related costs are going to be removed. So this basically allows us to play with a lesser cost, allows us to make available lesser cost of interest to all our applicants, but at the same time help us retain our spread. So this is something that is a little unique. I mean, handful of players only in the entire country doing it. And we've tried to go down the employer-driven path.
So are you going to stick with India then, or are you going to branch out into different countries?
For the short to mid-term, we are going to stick to India, but we do have plans of, taking our learning, providing our credit as a service platform to other countries as well. But going international is only a few years down the line. It's not going to be in the short to medium-term plan.
Okay. And what would you say is the vision of the company then?
Okay. So if you look at it, there's a large section of eligible applicants in the Indian economy who are totally left out of formal credit. So our vision is a combination of making available basic financial services to every eligible applicant in as short time as possible. But at the same time, credit is basically an anchor for OptaCredit. So we over a period of time, OptaCredit will evolve into an online financial services conglomerate, right from providing insurance quotations, providing services relating to factoring, etc. So that's what we are looking at. And this is something that's basically not been done anywhere, barring one or two guys probably in China. Everyone's focused only on one vertical, but once you start getting traction on one vertical, cross-selling other areas is going to be that much more easier. And we want to make available OptaCredit as a one-stop shop for all financial needs online. And with the advent of Digital India, Make in India, and also this demonetization move, there's going to be a lot of rich data that's going to come into the ecosystem. So basically, data for us is oil, because we are not dependent on physical reams of data or physical reams of applications or additional documents for us to underwrite an applicant or assess an applicant. What we do is, because the data is going to become that much more richer, we're going to get greater insights into every applicant. So I think digital lending is the way forward, and probably somewhere around 5 years down the line, we are viewing ourselves as a serious player and a serious contender to all the financial services and totally go online. Our 2020 vision is to have $1 billion asset under management. And I think this final push has come from the Honorable Prime Minister and the Government of India by way of this demonetization move, and we are on track.
Mm-hmm. Okay. Let's talk about you then. What's your role within this company?
Designation-wise CEO, but everything from paperboy, courier guy, everything, to attending meetings. So though I do take care of sales, so I have another colleague who's also taking care of business development and strategic alliances. I do take part in that as well. But my strength currently is to provide inputs to the credit risk team, because I've been a large part of my time involved with EY was with discussing with banks and financial institutions to find out what were the gaps in their processes. So what we've done is I've used those learnings and compressed it. Mm-hmm. And right now it's an extremely quick turnaround time that we make available to our applicants, and I'm trying to get more out of those learnings and trying to make the process that much more slimmer and faster.
What is your leadership and management style like? Are you more of a hands-on or hands-off person?
It's a combination of both. There are certain areas that I would definitely only listen to. I would take better advice from my colleagues. But there are certain areas I am a little confident about, and unless I'm convinced otherwise, it's everything is open for discussion. But there are certain things I feel very strongly about. That includes certain product-related features, even for our personal loans. As I said, digital marketing is something that I leave to the specialist, but I always am a hands-on person. Mm-hmm. The decision-making is left to them. That's how I operate.
Okay, cool. And what was the opinion of your friends, families, and colleagues when you told them about this idea?
So it's been a long journey, if you might have noticed. So 2014, mid I quit. I did a year-long research, then started somewhere around 2015 and got my license a couple of months back. So it's been a long journey. So the first year was basically enthusiasm, though there was a lot of skepticism involved. And luckily, my family's always supported me. But when I put in my papers for a well-paying job, my friends did probably say, okay, why do you need to take that risk here? 2 years down the line, you'll get a couple of promotions, you'll be on a much grander pay scale. Why do you need to do that? But something within me said, okay, this is not this is not going to be my way forward. This is not going to how I'm going to visualize myself in the future. And that time, there were a lot of people who advised me, okay, it's better you avoid taking this risk. But I think over a period of time, your journey actually justifies what you've done. And after the first year was a little tough because there was a very less clarity about which direction I had to take. Once the research concluded, then I started applying for licenses. Mm. So it was basically a long journey in the wilderness. But I think 2 months back when we actually went live. So that too actually justified people telling, boss, we've done it, we've been there, I've gone into the wilderness, come back. And now when we start onboarding companies, actually validates a lot of things that we had done earlier. Now people tend to see the logic in our idea, the advantages of actually quitting, but it's a journey that I don't think everyone is meant for. You need to be a little perseverance is the word I'm trying to focus. It might be a little cliched, but that is simply the only thing that's going to help you when you're actually trying to start up.
Mm-hmm. Would you say it's fun?
Yeah, it is fun. It's a roller coaster ride. So there are some fun days. There are some days that you actually might feel like quitting, but you just sleep over it, and the next day you're back to normal. That's how I've actually tried to tide over all those days. Mm-hmm. A fun element basically comes in when you're even proved wrong and even proved right. So there have been times when we've been actually laughed at. So that's actually fun because we laugh it out internally. But I say we take it day by day, and it's been only a growing experience. And I don't think I'll ever stop learning from this experience.
Excellent. Last few questions then. What should first-time founders be focusing on?
Okay, there are 3 things that I've actually found out that a couple of my founders and other startups have done mistakes. So luckily, I'm in a segment where demand is doesn't need to be created. It is existent. You need to tap it. But there are other sectors where you need to do your research before jumping. There's a product market fit that I think a lot of people actually do not do. You simply cannot develop an app, but yes, iteration is part of the process, but you need to actually find out what problem that is you're exactly solving. So whether it is an impulsive purchase, whether it is a necessity purchase, what type of sector you're in, what type of problem you're solving is a huge problem, is a huge necessity. You need to map it out rightly. And second is you need to get a team. Yes, it's during the ideation stage, you might as well do it on your own, but you definitely need a team, and I would suggest you get a co-founder who you have the right vibes with. There's no point in having a co-founder who's extremely brilliant, but you don't gel with the person right. You need a proper co-founder, and luckily I have a proper co-founder over here. Perseverance, the final thing which I did say earlier. Get up. It is cliched, but I did laugh at all those quotations which used to come a couple of years when I read them a couple of years back. Perseverance is the only thing, but now I understand it. There's nothing better than perseverance to get your startup up and running. You might hit a brick wall. You need to iterate again, go forward. You might hit another wall, iterate, go forward. It's an unending journey, but I feel at the end of the journey, the learnings are so huge, and what you get out of the experience is so huge. I think it is worthy, but you need to probably be able to withstand the interim period, which is going to be a little tough, but I can assure you, but the end journey is extremely fulfilling.
Mm-hmm. Excellent. So last question then, if someone wants more information on OptaCredit and yourself, what must they do?
Just go to our website, that is www.optacredit.com, and you can mail us anytime at contact@optacredit.com, and we'll be there to help you out.
Brilliant, Kumar. Thank you for coming on the show today. I really appreciate it.
Thanks a lot, Neil. It's been a pleasure. Thanks for bringing us on board.
Thank you very much. Cheers. Thanks to Kumar for coming on the show today. If you want more information, go to the website, OptaCredit.com. Thank you for listening and subscribing. If you like the show, please subscribe and leave a comment in iTunes. Thank you for supporting the podcast. If you have any feedback on the show or want to come on the show, please email me hello@neilpatel.co or tweet @IndianStartupSH, or please go to facebook.com/Indian Startup Show. We'd love to connect. Thank you and goodbye.